Busy times indeed. We got a few things to speak about here today in this video, okay? We're going to talk about AMD stock in this video as a big AMD shareholder. What's going on there? Stock's making an over 7% move. Talk about my opinions, perspectives on what is going on there. Go talk about Fubo. Fubo is a stock that's been taking the slaughterhouse and it's dead at this point in time. We'll talk about what's going on with Fubo, my opinions and perspectives there. We're going to talk about SoFi in this video here today. Something very interesting I'm seeing with SoFi. We're going to talk about Micron stock. That stock's been so weak ever since their unbelievable earnings. Keeps going down and down all the way to Chinatown. Just saw somebody place a $1.5 million put bet on Micron going down to like 280 by, gosh, when was that? I think it was by May 1st. So we'll talk about Micron in this video as well today. Okay, so we got all that to get into at the top of the video. From there, Dan Ives wearing an unbelievable jacket. Look at Dan Ives. Holy smokers, that ain't no dang joke, okay? And talking about the tech trade and those sorts of things. Looking forward to getting into that. And then this one, stocks rise as oil falls, cautious optimism, all that good stuff. Looking to share my opinions and perspectives there. Busy times, folks. One thing all I need from you, if you could just smash that little like button, hit that little thumbs up icon, that would mean the world to me here today. Additionally, make sure you subscribe to the channel. We are now at how many subscribers? 130,000 on this channel, something like that. I appreciate every single person that is here. Okay, so AMD right off the bat, let's talk AMD. A huge move here today out of nowhere, 7%. And if you look at, for instance, the NASDAQ was up 0.77% here today. SP 500 up 0.54%. So it was a decent day for the market, but AMD just went crazy. So what's going on with AMD? And I had also posted on my X page. I don't know if you guys follow me on X, but I always have that linked in the description area down there of all my videos. I said, AMD, who knows something? What's going on here, right? And so here's what we're hearing behind the scenes in regards to AMD. We're hearing reports that AMD could be moving up CPU pricing, not GPU, CPU pricing as much as 15% from what we're hearing reports. Now, whenever you hear these reports, don't always think it's a for sure thing, right? But a lot of times, like, those reports aren't going to come out unless there's something factual there, right? Now, would this also make sense? Yeah, it would make sense. CPU demand is also accelerating rapidly right now, along with GPU demand. So for AMD to be going up on pricing doesn't surprise me at all, and especially given AMD's always, in my opinion, a little underpriced. That's how I've always felt. I've always felt like AMD a little underprices, and they're always trying to focus on undercutting everybody else. And so they definitely, in this sort of market that we're in right now, where CPU demand's insanely high, GPU demand's insane, you really have some pricing power right now if you're somebody like AMD, right? For NVIDIA, that's a tough thing right now just because you got AMD finally coming in and being a real player with the 450 chip, right? And so for NVIDIA, it's a little bit tougher as far as pricing advantage and to go up on price. If anything, NVIDIA is going to have to drop price, right? But AMD's got a lot of wiggle room when it comes to CPUs and GPUs, in my opinion, to raise price quite significantly, which you're going to see reflect in AMD's margins over the next 4 quarters. What I believe is going to happen is you're going to see AMD's margins increase. I'm talking gross margins, I'm talking operating margins, I'm talking net margins. You're going to see those continue to increase as this year goes along, and just wait to see where their margins are at 3 or 4 quarters from now. You're going to be flipping your flapjacks, okay? So AMD, exciting times. I think also we're starting to go into a hype cycle. We just need to get past all this. You know, there's just a lot of, obviously, market negativity out there right now. As we get through that, then there's going to be a major hype cycle build in AMD as we get closer and closer to 450 series. So, you know, just understand, and I've been saying this in regards to AMD, like AMD, as soon as the market goes a little bit risk on, AMD is going to fly. And look at it today. You know, NASDAQ's up a bit, and AMD just, you know, NASDAQ's up 0.7% and AMD's up over 7%, right? It's unbelievable. So just keep that in mind. If this market goes risk on, get ready, man. You haven't seen anything yet in regards to AMD in that sort of move there, okay? From there, I want to talk about, let's go ahead and chat about SoFi. So I have good news regarding SoFi, okay? The Muddy Waters report obviously really damaged the stock. The stock was already weak before that report came out. But the good news for SoFi is what we're seeing at this point in time, if I pull up specifically kind of a 5-day here, is the stock's obviously kind of bottoming. Now, if the market gets hammered again, right, and the S&P 500 gets hammered, NASDAQ gets hammered, the Russell 2000 gets hammered, all risk on, like SoFi's going down. It's as simple as that. You could say that for any risk on related asset like a SoFi is, right? However, if this market stabilizes and starts to uptrend, SoFi's actually positioned to go back to 20 plus, right? Now, all this stuff will be what it's going to be in the short term. It is what it is. But if you want some kind of good news on that front, you got some good news, okay? Now, you want some bad news in regards to software stocks, Salesforce, Adobe, ServiceNow, all these stocks? Listen, these stocks relentless selling pressure. I mean, it's unbelievable. IGV just keeps going down. I think IGV was down again today. Let's take it. Yes, IGV was down again today, 0.52%. I think Mr. Softy was down again today, Microsoft. I mean, it's incredible how weak these sorts of stocks are. And, what's my opinion on this? I think the market's delusional. That's my opinion. I think the market is convinced all these companies are going to have no growth going forward, right? Or going to have even shrinking business models. I just don't think that's how it's going to be. And so we have a major difference of opinion here, and we'll see who's right in the end, right? That's what makes a market. But I look at this as the best opportunity to buy software stocks, at least since the great financial crisis. That's how long you got to go back to see software-related stocks trading, at just silly valuations. And so we'll see what happens. But I think in the end, people are going to realize, and there's a lot going on behind the scenes in regards to private credit. There's a lot going on behind the scenes that people don't know regarding private credit redemptions. And a lot of private credit, from my understanding, is very heavily invested into SaaS-related stocks, software stocks, right? And so you got to keep in mind, this might not have anything to do with like people being, so scared of AI and software stocks aren't going to have any growth in the future or anything like that. This could have a lot more to do with just like people need money, so they sell, right? Like that's just what happens in the market. The city I live in, Las Vegas, real estate prices went down 50+% peak to trough in the great financial crisis. Was it because no one believed that Las Vegas real estate would be very expensive 10 or 20 years from that point? No, it's because people needed money and people sold those assets at whatever price they could, right? Foreclosure, short sales, all that sort of stuff, right? They threw away their keys. They did whatever it took. And so this has nothing to do, a lot of what's going on right now with SaaS stocks, this has nothing to do with where Salesforce is 10 years from now or 5 years from now, or where Adobe is 5 or 10 years from now, or where ServiceNow or Intuit or any of these companies, or Microsoft for that matter. It has to do with people want money. And so they're redeeming out of these funds, and they sell off. And so just do keep that in mind in regards to this, okay? Another stock I want to talk about, Fubo. Fubo, oh my gosh, the stock's just been killed. I saw something interesting, and they were talking about this on CNBC here today. I wish I could have taken a screenshot for you guys. But they were talking about Monday, so just, 2 days ago. They were talking about basically like retail investors are selling, right? And it was like retail is actually showing like weak hands. And we've also seen very weak activity with retail investors buying recently, or retail traders buying, right? So it looks like retail has very weak hands right now. And a stock like SoFi, SoFi also actually, but a stock like Fubo, oh my gosh, like that's going to be very retail driven, right? A super small market cap like that. And also they just had the reverse stock split. A lot of times after a company goes reverse stock split, the stock sells off over the next few days. So the thing with Fubo is a lot of the selling pressure doesn't even have anything to do with fundamentals. It's not like Fubo's announcing some numbers in the past week and past several weeks, and it's so bad, and it's like, we have no customers anymore, or oh my God, like none of that's coming out. It's just a stock sells off relentlessly. And so that's where you either have to have conviction and say, I'm holding through this, or I'm going to buy this dip, or like, no. And so me personally, I still have faith in the company, right? Like the income statement's in a better place than it's been in a long time, the balance sheet as well. So it's a very speculative stock, but I think as long as investors have confidence in the direction the company's headed, right? And obviously the whole merger that like confused people and what's going on there, right? As long as people have conviction in where that company's headed, I think you're going to see a much higher stock price 9 to 12 months from now than what you're looking at today, right? So, but that's an all game that's got to play out, right? Now, if you look at a stock like Micron, so let me pull up big tech here. This stock, Micron, has been incredibly weak since they reported unbelievable earnings. I mean, their earnings were, dare I say, perfection. I mean, A++ grade for Micron here, and yet this stock cannot catch a break. Look at where it was just before earnings, right? It was at, pushing close to 470. And since that time, even though we reported an A++ quarter, near perfection, the stock's down 18%. Now, over that same amount of time, the QQQ and the S&P 500, let's see where those are at. So QQQ down 2%, S&P 500 down 1%, and yet Micron's down 18%. So here's my opinion on what's going on with Micron. Listen, today, Google McDougal supposedly, released something that is seen as potentially hurting memory, the need for as much memory as people are thinking, right? So now we'll see what ends up happening here. No one knows how this is actually going to play out. No one, and I mean even some people that are insanely genius in regards to technology. No one knows exactly how much of a serious threat this is to potential long-term memory demand and high bandwidth memory and all these sorts of things. The thing I'll tell you about it is this is shoot first, ask questions later, right? And Micron was a $60-something stock last year. And it went from $60 to $470. People are looking for reasons to sell Micron. They're like, please give me a reason to sell Micron. Because a lot of people want to take profits. A lot of funds, a lot of hedge fund managers want to take profits, right? The stock had an incredible, ridiculous run off the Liberation Day drama of $60-something stock up to that 470 level. So people are looking for a reason. And if all of a sudden Google McDougal says, oh, we came out with this, like people are going to sell it, even if they're uncertain on what all this means for Micron long term. They're going to shoot first, ask questions later. In the stock market, it's sell first, ask questions later, right? And so that's what Micron's going through right now. And the great thing from Micron is the numbers are incredible. The numbers are going to be incredible for at least the next 2 years, right? Meaning 2026 and 2027. 2028, 2029, we'll see, right? A lot of that's going to have to do with are Meta, Amazon, Google, Tesla, all these companies, are they still spending like insanity, right? If they're still spending like insanity on CapEx, then memory is going to be good even into 28, 29. But we'll see in regards to that, right? And so that's why that stock remains very, very weak. And then Mr. Softy, this stock is just incredibly weak. I mean, my gosh, is Microsoft stock weak. From this one's all-time highs that it hit, let's see, right around here, right? Stock is down about 32%, from its all-time high. Wow, so weak. And for one of the biggest, best companies in the world, that's the most incredible thing about this. It's not like it's some random, it's not Fubo, right? And yet, my gosh, is the stock weak. Now, over that time, the Qs are down about 7%, and the SP 500 is down about 4%. Now, Microsoft's such a massive market cap. Do keep in mind, the Qs wouldn't be down as much if it wasn't for Microsoft going down so much. And the SP 500 wouldn't be down so much if it wasn't for Microsoft going down so much. So that just goes to show you, like, the IGV is a huge component why this market has moved down, right? I know we got all the other stuff going on, but I'm just telling you, this is a huge reason, guys. Huge reason. The IGV's been a massive component over the last number of years in regards to the weighting of the Qs in the SP 500. And so, very, very interesting what's going on there, right? Now, is Microsoft stock? I think this is a fair question. If you told me I had to buy something in big tech, right? Well, let's say specifically Mag 7. But let's say I wasn't allowed to buy, and by the way, Meta's so weak. Look at Meta 594, such a weak stock right now, right? If you told me I had to buy something Mag 7, and it was not named Meta, and if it was not named Amazon, the stock I would buy, it's Microsoft. It's Microsoft. If you told me I couldn't, if I had to buy a Mag 7 and it's not Meta and it's not Amazon, those are always going to be my front runners. But yeah, if I had to buy something, I'm going to buy Microsoft, Mr. Softy. So... And then after that, probably go NVIDIA. after that if you force me, okay? Okay, so let's go ahead and react to some videos. By the way, pinned comment down there today. We got a massive sale coming up for 1000xstocks.com. That is the compare feature, search feature. That is how to run advanced projections and intermediate projections. This is what I use on a daily basis to make my long-term investment decisions, run projections on companies, see exactly where these companies are going. This is also what I listen to conference calls through. I'm able to adjust the speed, get AI transcripts of it all that good stuff, man. It's an incredible in-depth product. If you're a long-term investor, it's a product you need. So that'll be pinned comment down there. The sale is coming up April 1st. We call it the April Fools. Don't be a fool sale for 1000x. And that will be, once again, pinned comment down there. Let's react to some videos.
Here in tech.
Yeah, look, it's a white knuckle moment. I mean, if you look at what, this is a risk-off trade. But in our view, look, in decades of covering tech, I mean, we're going to go through geopolitical, macro issues. But our view is that if you look at the base case here, it's something where when we talk about a matter of weeks rather than a matter of months, the tech trade continues to be well intact. And I think the sell-off represents the opportunities in the AI revolution, specifically also when you look at names like cybersecurity and software that I actually view as defensive, and they've actually outperformed.
Interesting. I mean, we get the RSA cybersecurity conference this week. I think you're headed there.
Yep.
Cyber, to your point, especially when you look at geopolitical landscape in Iran and capabilities in that country as well, just look no further than Stryker and the attack there. What would you be buying in cyber right now, and how should you be thinking about those capabilities?
Well, I think that's my view. I mean, that's the defensive area of tech in terms of cybersecurity. And I continue to think that AI ghost trade around software has been way overdone. CrowdStrike, Zscaler, Palo Alto, I think Checkpoint's another one. I think cybersecurity, obviously we'll be there this week at RSA, it's going to outperform because you also have to think about when you have events like this, what in tech can outperform? Cybersecurity, I think, is front and center, is what's going to be actually a subsector that will outperform specifically over the coming weeks and months.
Do you go near anything else in software, or is that really that's really
Look, I continue to think that the AI ghost trade, the software sell-off, continues to be the most disconnected trade I've seen in my career. And I think you've seen software has outperformed the last few weeks because it goes back to Anthropic. I think ever since they did that event, it's sort of a bottoming. That's where Salesforce, ServiceNow, I look at Oracle, Microsoft. Morgan, my view is if you look out, this is still a fourth industrial revolution. That's not changing because of what we're going through in terms of this nervous environment here. And I think when you look at moments we've had over the years, go back to Liberation Day a year ago, tech continues to be what I believe will ultimately lead this market higher. Software, cybersecurity, I think are some of the most disconnected areas, and that's why we'd be owning those.
What about semis right now? Because they've continued to sell off. I mean, Micron had a blowout quarter last week. It sold off. NVIDIA's basically been sideways for months now.
Look, I think that's, if I look at, we've been at Palantir, our team's been at NVIDIA's GTC, demand's 12-1 versus supply in terms of AI revolution. And I think this you're seeing right now, semis is where everyone was hiding out. The risk-off trade's there, but that's where NVIDIA, Micron, AMD, I think those are names you continue to own because, look, we're only in year 3 of an 8-10-year build-out. And I think it's very easy in these environments, these white-knuckle environments, to get caught up in maybe, some of these sort of dystopian views. When you look at tech, these are the times to own semis and software, but you got to have more of a barbell approach in terms of defensive and offensive, and that's the way to play it.
So let me play devil's advocate here against Dan Ives for just a moment here, right? He talks about 10-year build-out, right? Fair. Very possible. But to push back against here, Dan Ives, let's imagine we had a big recession in the next year or two, right? Might not happen. Hopefully it doesn't happen. Hopefully the economy is great, right? But let's just say hypothetically that scenario happened. And this is where we got to talk about the risk, right? Okay, what does that mean for the 10-year build-out? That would mean you would get a massive pullback in the build-out in 28 and 29, right? Not where these companies would stop everything, but where they would slow down big time. Now here's where comes the big risk. And why would they do that? Like Meta, Amazon, the reason they would do that is one, their stock prices continue to get hit, and two, a scenario where their revenue starts to miss analyst expectations and they start reporting much less revenue growth, right? And so if they all started doing that because the economy was weaker, they're all going to pull back on CapEx big time. It could even start in 27, but really 28, 29, right? What does that mean for an NVIDIA? What does that mean for Micron? No pricing power. because suddenly there's way less of a need to continue the build out at the pace they're building out, right? What does that mean for even AMD? They would get hit as well. The one thing for AMD, why they don't get hit, and I try to explain this to people, and I hope everybody understands this. I think most of you guys do, but some people are like, wouldn't AMD be hit just as much as NVIDIA and Micron? No, not even close. Why? AMD hasn't really even begun to benefit in a major way from this build out the way these other companies have, right? AMD is just about to start to benefit. So AMD doesn't have nearly as much to lose as an NVIDIA, who's been able to command these unsustainably high margins, and all these other companies that have been benefiting from this cycle for years. So that's why AMD would get hit as well, but they wouldn't get hit nearly as hard as an NVIDIA or Micron or some of those sorts of companies. As soon as those companies lose pricing power, margins contract major way for them. And the margins that Micron and NVIDIA are commanding right now are like nothing we've ever seen. Which means what? It's not sustainable, right? Like when you see chip companies reporting margins that are just ridiculous, you're like, how are they? That's not sustainable long term. Every cycle, margins have ended up popping. And I haven't seen it yet where it hasn't happened, right? And so that's the risk. And everybody's got to understand that risk, okay? That might not happen. And let's hope the economy is great. And Amazon's revenues keep going up, and Meta's revenue, and not just going up, but going up at a rapid clip, maybe even faster than what they've been going up. Let's hope these companies keep doing that. If they can, it's all fine. We're all cool. If the revenues start missing, stock prices start going down more, there's going to be a massive cut. Probably starts in 27, but it would for sure start in 28, 29. And then, NVIDIA's going lower from here. The stock will go down to 125. Maybe even lower, but 125 is pretty much in the bag. If that were to happen, Micron will go probably sub 200, right? And then AMD would probably get stuck in a 250 to 350 range if that were to happen, right? But we'll see, right? But it is a risk. Like, you just got to understand it, right? And that's something I always try to do on the channel, is just explain different scenarios, because a lot of times what I find with investors, the big mistake they make, they bank on one scenario. No! You have to have a base case, what you expect, but you have to also consider a bear case and a bull case. That's why with 1000xstocks.com, what do? When you run your projections, we have the intermediate projections and advanced projections. We let you run a base case, a bull case, and a bear case, because you have to assume things might go a lot better than you expect and things might go a lot worse. And if you understand the range of outcomes, you won't then panic when things aren't going your way in the market, right? When this isn't happening, that isn't happening. So when I run numbers with AMD through 1000X, I have a bear case with it, I have a base case with it, and I have a bull case with it, right? That's the important thing. The issue comes where people, they're just like not expecting anything to go wrong, and it's like, dude, you gotta account for what if things go wrong, and what does that look like for your stock? What does that look like for your portfolio?
We are, as you know, green across the board. WTI, there it is. It's back, though, at 90. So keep your eye on that, and thus keep your eye on the stock market. But that's the relationship that matters most of all. As everybody seems to know, oil down, stocks up. Pretty simple. How about another one? Stocks down, Trump put.
Yes.
Pretty simple, because Citi today says the so-called Trump put still prevails.
Yeah, I would agree with that. And I think that where we found that Trump put was specifically in the oil market itself. There's optimism certainly built into the tape over the last 48 hours.
Cautious
for sure.
Optimism, maybe,
well,
right?
I think what you're looking for is the confidence that you can find the evidence that you're validating that optimism with obviously some form of a resolution. So in the interim, I think you're going to see volumes begin to thin out. We saw that yesterday. We are also approaching the end of the quarter. Again, that might lead to a little bit of volumes thinning out. So I think you're looking for some tactical setups. I think I found one yesterday in gold. I really think right now, while you're sitting in this waiting period to confirm the optimism, that's really your best weapon.
Jenny, you can get an idea that firms are trying to game this out a little bit, think they can start to maybe look beyond it. JP Morgan's trading desk says they're closing their tactically bearish call and they're moving to neutral. Now, it's just a move to neutral. However, it does signify what I think is fair to say, this cautious optimism that there's going to be some level of resolution in the nearer term rather than having this drag out and potentially get worse and have oil spike way up yet again, and you know exactly what that would do to stocks.
Right. And I think when we're thinking about kind of gamifying it and playing it out, the way I've approached the last several weeks is to really, to the best of my ability, ignore the politics and follow the economics. And if you follow the economics, that's where you get, because the economic pain right now, or the potential economic pain right now.
I'm glad you used the word potential, because it's too soon to have seen significant economic pain. Obviously, going to the pump and paying $4, which is where gasoline is now, and if you're diesel, it's a lot more than that.
Right, and
certainly
if oil,
in some states.
Right, and if oil really does go sustain at 115 or 180, the potential economic pain is devastating, and it's devastating to everyone. It's devastating to like everyone in the Middle East. It's devastating to everyone in Asia. It's devastating to us in the U.S. And so when I think about the taco or the Trump pivoting or whatever it is, I'm really thinking of that more as follow the economics, because that's ultimately where he goes.
Okay, hold your horses for one flip and flapjacking moment. Listen, I don't like the word devastating. Oh, you're going to have to pay more at the gas pump, and, truckers are going to have to pay more. It's devastating. We're all finished. The whole economy's done. Pfft. Dude, if the economy's that weak, that gas price goes up and everything's devastated, we didn't have a strong economy to begin with. We had an incredibly fragile, very weak, pathetically weak economy. Like, that's just ridiculous. Like, one little factor, like, oh, everybody's gas price went up. We're done. Like, what? This is crazy, man. Just crazy. Like, does it dent? For sure. But devastating? She used the word devastating how many times there? Like, that's just ridiculous.
He goes, in the end, I think, towards what's the best economics for the United States.
Oh, I don't know. I think you follow the stock and bond markets. I mean, I think those have proven to be the triggers, if you will, that matter.
It's one and the same.
No, it's not. No, they're not the same, because as I said, you can't make a call on the economy based on this yet. But you can make a call based on the stock market unraveling and bond yields getting a little bit away from us.
But I said the economics, not the economy. Right, and the economics of what's going on is devastating for stocks, right? If oil prices are suddenly at 180 in a sustained way, the economics for the company.
180.
I mean,
okay, but you know what? That was thrown out there. Say 115. All I'm saying is you follow the economics and say, okay, does this make sense? Like, how does this company work? How does that company work? And then it hits the bond markets. How do the economics work here? Well, it creates huge inflation. That's bad. So you could say it that way. I'm really not talking about the economy. I'm talking about the economics on a stock by stock basis, on a company by company. And that's what you see reflected in the stock market.
No, but my point is that you've already had a backup in yields that was getting a little uncomfortable.
Yep.
And you obviously had a come down in the stock market that was getting very uncomfortable. Some would say, well, we didn't get truly and technically and historically oversold like you should. And I said, well, the only barometer that really matters is the one that lives at 1600 Pennsylvania Avenue. And to that market watcher and technician, we were oversold enough. And that's where the Trump put, as it was called again today by Citi, prevailed.
Yeah.
Here's a little interesting factoid. When we're talking about economic impact, I, of course, go to what's the earnings impact. Earnings in aggregate for the S&P 500 have been revised higher over the last month. That's a little bit of a head scratcher. That's a little bit of, wait a second, they've been revised higher for this year by 2% since the beginning of the month. And by the way, that has helped the markets, definitely. That's a reason we're not down more with oil where it is now. The forward multiple on the S&P 500 is now 20. We were doing a lot of reasonable hand-wringing at the beginning of this year with that multiple approaching 23. Now you're at 20 with good growth projected. But ultimately, that growth could come down if we do, in fact, see this continuing hostility, which we can't rule out. Scott, you twice said cautious optimism. I am optimistic. I added to equities on Monday. I bought eBay. But that caution is there. We've got 4,500 Marines inbound into the theater. We've got the 82nd Airborne coming in. This is a president who does not like to bluff, and he's going up against a country that doesn't really back down from any saber rattling. So we're not through this yet.
Yeah, no, that's clear. Josh, and I'm wondering, how you see things. It seems pretty simple in terms of what...
Yeah, the most important thing that you can do, every person watching this video right now, is don't bank on like, oh, things are fixed, things are better. Oh, T-Man said this, it's all good, right? Don't bank on it also getting way worse. Don't bank on anything. Just stick with your game plan, invest in the great companies that are going to do amazing over the coming years, right? But don't get your hopes up that, oh, a bottom's been reached, or we're about to bottom, or, you know, we're not going to go lower, or yes, we've had, like, don't play that game, man, because there's no telling where things could go here.
What to watch, not to make light of or oversimplify the conflict in any way, but from a investing or trading perspective, we do what we do and we look at things the way we do, and looking at that move in oil seems to be the most significant, if not the only thing that matters most of all to this stock market right now.
I agree with everything that you've said. The program is 6 minutes old, and so far, Scott, you've done nothing but drop truth bombs. And I'm not here to kiss up to the teacher, but that's the number one thing on a day-to-day basis. And if you're a long-term investor, it shouldn't matter that much. But if you're trading this market, oil red, stocks green, period. There's no nuance. That's what's going on. That's number one. Number two, the other thing you said, Scott, which Jenny is wrong and you are right, we don't know the impact. We know it's a negative impact, but we don't know the extent of the impact of the price of oil on the economy. I'll tell you in 6 months when we have the third revision to GDP. Scott is correct. It's the stock market. And if you think Scott Bessent doesn't call the Oval and say, Mr. President, this is Friday, the S&P 500 is just broken below its 200-day moving average for the first time since May 2025, I'm not even saying Trump would ask, well, do I care or not? I think it's instinctive. And to me, it's not totally shocking. The president has to deal with real-time news and information, not just geopolitics, but economics. And he doesn't have the economics at his fingertips. He's got opinions, but he has the stock market right in front of him. We know this administration cares what happens with the stock market. We know when it's going up, they view it as a report card of sorts. So I'm not totally shocked that there was like a tweet after the close on the day that we finally broke below the 200-day. I don't think it's an accident. And I do think the ongoing talk of maybe a truce, here's a 15-point plan, I think so long as the market stays green, as that news flows in that direction, you could continue to see that. Here's the problem. Look at the tone of the bounce. You know what's the leading sector in the market today? The only sector up 1% or more? Utilities. You know what's number two?
Materials.
Yes. You know what's number two? Healthcare. Materials. This is not the environment of 2025. The problem is people don't know what time it is. They want it to be 24 or 25. They want it to be led by cyclicals. They want it to be led by tech, and it just isn't. Financial's the worst sector today. They're actually the only sector red.
So when you see, you know, to his point here, you know, like, why does this matter, right? He's talking about, you know, like healthcare leading. He was talking about what else was leading here? Materials.
The only sector up 1% or more, utilities.
In utilities, right? Like, what does that mean? If you're watching this right now, you're like, okay, like, what's his point he's making here? That means, since those are the best performers, that means there's no real confidence in a rally today, essentially. If like healthcare and utilities and material, like boring stuff like that is leading the market, that's not real conviction. If there's real conviction in the market, you're going to see big tech rolling. You're going to see Amazon, Meta, Google, Microsoft, all those stocks moving. You're going to see the IGV moving up, which is all the software stocks, right? If there's real conviction, real confidence that it's like, okay, we're rolling, baby, that's what you're going to see rolling, right? You're going to see stocks like Caterpillar doing incredibly well. That's what you're going to see. You see those boring sectors moving up, that means people aren't actually really feeling that bullish. They're still very, very cautious. So it's just something to be aware of, and that's, you know, the point he's making there.
Number two,
materials.
Yes. You know what's number two? Healthcare. Materials. This is not the environment of 2025. The problem is people don't know what time it is. They want it to be 24 or 25. They want it to be led by cyclicals. They want it to be led by tech, and it just isn't. Financial's the worst sector today. They're actually the only sector red as I'm talking. So you need to know what time it is. And the time that it is right now, we do not have convicted bulls in this tape. They're not here.
Yeah. Well, it's a good point, too, because the convicted bulls, if you want to refer to...
oh, and that's another one. If you really want to feel confident about a rally in the stock market, the other stocks you want to see doing very well are, let me pull up here. Let's pull up like JP Morgan. You want to see the financials rolling, right? You want to pull up Wells Fargo. You want to pull up Bank of America. Yeah. Oh, BAC, Bank of America. Yep, there we go. You want to pull up Goldman Sachs. Maybe Citi. We could pull up Citi too. And you know, what do we see from these stocks? Just nothing, right? Is this one day? Man, you know, those stocks, that's another thing. Like, look at this, there's no action there. So if you're in a real bullish rally, people are feeling market's bottom, like we're headed up, like financials, you're usually going to see momentum. If financials aren't moving up, it definitely leans like no conviction, no confidence in the market.
In that manner, retail has been bullish and has had a consistent level of conviction about this market, enough so that at every moment of upset, they have been buyers. You have to wonder whether that is changing now, based on some information from Vanda Research, which says mom and pop traders on Monday notched their first day of net selling of single stocks since 2023. Okay? Wow. That came as the market rallied. Retail was selling into it. The first day of net selling of single names since 23. So, Joe, what do we make of that? What's the significance of it if it continues?
Let's see if a trend develops in that direction, because that is counter to what the behavior has been over the last several years where retail is buying. So let's get further information over several days, several weeks to confirm that. Josh mentions the tone of the market, and I think he infers there's a little bit of a weakness in that regard to this bounce. I agree with that. Let me explain that a little bit further. I had conversations in the last 24 hours with two systematic trend-following funds. They both said the same thing to me. We're neutral in terms of our bias. We've been carrying equity exposure to various indexes throughout the world as being long for the last several years. We are now neutral. We flattened it out. Why? Today would be the 5th consecutive day that you close below the 200-day moving average. Now, look, the 200-day moving average might mean nothing to you, but if enough people are using it, it's a variable in the market. And for those funds right now that are following that, and they are a force, they now have a bias of being neutral for the very first time in many, many months.
That's fair. And that's my opinion on technicals, right? Technicals have a lot of value because people give them value, right? So me personally, I don't care if we're under the 200-day or over the 200-day or under the 50-day or over the 50-day. Like, to me, as a fundamental investor, I don't care anything about that. But you do have to understand there's a lot of funds and traders out there that look at the market from a technical perspective. If the technicals aren't lining up, they sell or they refuse to buy. And that just is what it is, right? So that's a great opportunity for us longs that don't get into all that and aren't trying to play those games to pick up stocks at great valuations, obviously, right? But just something to understand in regards to the market, okay? I hope you guys enjoyed today's video. I hope you appreciate it. I appreciate you joining me. Thanks so much for being here today. Once again, pin comment down there for the huge 1000X sale we're about to have April 1st. April Fools, don't be a fool sale. That's for full access to 1000X. Every single human being watching this needs access to 1000xstocks.com. So make sure you take advantage of that. Put in your name, and then we can send it over either via email or via text, however you want to receive it. You can receive it, okay? I appreciate y'all. Much love, and have a great day.